Hi folks, Nick here. I wanted to run through a few stocks, about half a dozen or so, to which I've had questions. So here's the first one, Apple, obviously. And the recent, obviously this was last week, disaster down to 92 or so, straight up from there, but then now it stalls around this line that we drew, and which is about 112-ish, which is the same line as this guy, where a while back I said it needs to hold it or break down. Let me see if I can zoom out and show you that wedge that tightened up, and right here is when I said it needs to hold it. It didn't, straight down, and now it came back to it. And now it's deciding what to do around that line. So it is important in the short term to keep an eye on this line, which is 112-ish. It's not a hard line in the sand. Now it does have an event coming up. It tends to run into the event and then fizzle unless they really announce something pretty exciting. What are they going to do? I have no idea. But I am seeing a lot of watches around. I went to a couple get-together this weekend, and at least 2 or 3 people out of 20 or 25 had them, and that was a little higher than I expected. I asked, would you buy them in Christmas as a gift? I did not get a yes from anybody. They kind of wanted to see a second generation. So even one of them said, I'm not a watch guy, but I wear this one 4 days out of the 7. Don't really know what that means. It means that she uses it for something, but not exactly what. But they all complain about it not being the device, meaning they need to be tethered to a phone. Long term, in my opinion, the watch needs to be the actual device that has the communication, and then the other device is the tether, the phone, the bigger real estate if you need it. But regardless, short term, Apple is not a sure thing. It is a sure thing that it doesn't belong here unless we have a debacle in the markets. On valuation, nothing has changed this dramatically in this short a period of time. So if I happen to own Apple stock or Apple calls in which I am green, very green, I would book them. And I would replace, that's me, I would replace, put the money in my pocket. I would use some of that money, ideally the house's money, meaning some of the profits and nothing out of my capital, to, if I'm still bullish on Apple, to replace the stock position or the call position into a cheaper one. Meaning, if I expect Apple in the next couple of months to rally up and I hold January calls or next March calls, I would book the calls in January or March and replace them with cheaper calls that are lower if I can, or just shorter in time, meaning that I don't want to keep so much on the line. Profits disappear. This is proof. This we bounce from. There's no guarantee we will bounce the second time. Zooming out to a year, these recoveries from like October lows, it doesn't look on Apple as bad. The V-shaped recoveries, which was this, off the SPY will be a better visual, are not typical. They happened this year, but they're not typical. So I cannot use the bounce from October as a strategy. That's hope. I hope I get a repeat bounce like I did in October. That's not a strategy. I know Apple is not worth this much less than that. Where's Apple worth? I don't know. It's where the market is willing to pay. So be careful chasing those pipe dreams. I would book some profit and replace. Okay, another one is Disney. That's a tough one, right? I kept getting questions, what do I do at Disney here? What do I do at Disney here? I always said it's too high for me to chase, it's too hot to short, and this is the exact picture of my statement. I can say I missed it. I can say I missed it. I even can say I missed it. I even can say I missed it. So I didn't chase it. Yeah, I missed out on some upside, but a lot of people chased it and then got hurt badly. So from here to expect it to go down to here, for me, is unrealistic without a major change or a headline. So if I'm holding calls up here, I would expect that those calls have run their course in the short term, but this area could be a catalyst. What is this area? This seems to be a support area. It got breached here, but that was a flash crash. So let's zoom out to a 1 year. So this was a well-consolidated area zone. This is not consolidated, but it's trying to act as support because this was consolidated, this trend. Fundamentally, it's a solid company. It's got good headlines, but all those headlines are baked in. I mean, it's not like they're going to announce a new Star Wars movie. They already did, or whatever movies they got going on. The parks are packed. I don't think the parks are an issue. As far as TV, maybe they are. I'm not an expert, but technically and fundamentally, like instinctively, I don't want to chase it up here. And if I have profits, I would definitely book them. And if I still want to participate on the outside, I'll buy cheap calls. I may do it every week. Instead of investing 10,000 here, I'll invest 200 a week. And if it hits high, boom, I make as much as 10,000. So because an explosion would occur in a good way in the premiums. So that would be my play on it. I would not risk big capital on the hopes that it continues up from here. The third one I wanted to tackle, which was Facebook. Facebook seems to be a company that's doing everything right, and more importantly, that the market loves it. Okay, so if this was a clear breakout, and then we had another breakout, and people are saying it's got to hit 100, and it came so close twice and then faded. Again, like Apple, it did not belong down here. I don't know exactly where it makes its money. I think their statistics are overstated. They count me as an active account or two, and I rarely use it. And the only time, most of the times when I use it is because somebody sent me an email that says, not somebody, Facebook sends me an email that says, you have a notification, and I click on it, and they count me as a statistic having logged in. Meanwhile, there was no actual message. I go back to the email, it says, so much has happened since you've been there last. So it's kind of like, hey, tickle you, come see us. We tricked you into clicking. But this statement tells me, the bounce tells me that the market is ready to gobble it up if markets are ready to stabilize and go up, up, and away. Now look at it. This is 12 months ago. It's not cheap relative to 12 months ago. It's cheap relative to this, but this is just days ago versus a run rate of 12 months ago. Now, I'm not saying sell it, but this is the area where I'm comfortable owning it or going long it. This is 2 years, right? So this was a climb, and then for a good part of 2 years, it spent a lot of time here. I'm going to zoom back to 1 year. And that's that area. So I'm comfortable going long it using this area as support. Like this day would have been perfect to go long it. I am uncomfortable chasing it up here. If I have gains, I'd book them. And again, same thing, replacement buy. I book them and I replace them with something cheaper. So this is a crude way of saying I want to see what it does here. So that's like $2 from here, eyeball. And if it breaks out, then it could recover the all-time highs. But I'm chasing all-time high hopes in a market, in an environment where markets are looking to crash, where, correction, they've just crashed days ago, and more people are saying we could crash again. I'm not calling for another crash, but I'm saying technically it could happen. So if it falls back down and breaks this line, I'd be worried. If it comes up to here and break out, I'd be happy because it can target. So I guess from here, let's put it from here to here, or is it from here to here, and then from here to here. So I'm comfortable chasing it by using this area as a bounce area. I'm not comfortable chasing it from here on up. Maybe if I see it bust straight through here, then it could go up. But right here, if I have profits, I protect them. How do I protect them? I buy longer dated puts if I can, or shorter dated puts for the interim, for the short term, like 2 weeks out. Spend a couple of $100 to protect the $10,000 position. Why not? Even if it's wasted money. Come on. I'm going to miss out on an extra $200. But to sit and hope that it continues up from here, I'm not willing to do that. So I can either buy protection or sell whatever profits I have, book the profits I have, and replace it with cheaper risk that still has potential. All right, that's Facebook. All right, let's go to another market fave, Gilead. Heartbreaker, almost exactly the same comments as Disney. Yeah, from up here, everybody's chasing it. I said I missed it, but I can't short it. But then I would be, I would be asked, well, what about, buying it here, buying it there, or I said, just 12 months ago, it was a lot lower than this, and it could revert to it. And there's so much froth in the market because of premium that's built in from buyouts, this and buyout that. The whole biotech sector, the healthcare sector, IBB is a good eyeball representation of that. You can see the highs almost identical to Gilead and the lows immediately. That's where the froth comes out first. There's a lot of new profits that want to hit the sell button to book. All right, so now it's back to that green line. Let me zoom out to 2 years to see how long that trend is. Okay, so this is 2 years of Gilead. Low coincides with this low and with that low, obviously. That's where we start a second trend, the green. So now we have orange and green. And then right here, we broke through the green, obviously, and the orange on the flash crash. So it almost doesn't count. Now we're back to the green line. So it's not a sure thing that we're going to use it as support, break through it. I want to see them. Let me zoom back in. I would like to see this candle, today's candle, use this green line as support, meaning I want higher candles. So is it doing this? Or is it going to, let me change that one also to dashed, because usually I put bubbles that I don't have time to do that right now. Or is it going to do break down from here and revisit the lows, these lows? Yeah, not the recent crash, although it could, right? So be careful. Again, here, if I have, this is the one that I would definitely book profits in out of all of them. If I choose only one stock, all of the ones that I called upon right here, this is the one that scares me the most. All right, so that's Gilead. What is the next one I want to do? StarBucks. I like the company. I believe I wrote it up recently, and I said, hey, it might be too cheap down here somewhere. Almost like Gilead, we have this green line, and we have this orange line that I have not extended. Let's extend. We almost kissed it on that day. Wow, that's amazing. So green line, they immediately rejected it, and now we're back inside the yellow line, which we traded for a while. This is 1 year. Quality stock, people addicted to coffee. They're not going to quit drinking coffee. It's almost like, drinking and smoking. People are not going to stop doing it overnight. And now we have a tight bubble area. What is that? We've got lower highs, higher lows, including the crash last few days, and now we're coming to a bubble here. Let me zoom in 6 months to visualize it, but better see it clearly. So what's it going to do here? So I'm going to put a little bubble and ask you to determine what's it going to do here. Yeah. So next few ticks are important. Is it going to use this as a bounce or break out of that, kind of like a couple of tickers ago? If it breaks out of that, I think it was Facebook, then maybe it goes to here. If not, it breaks down from that, maybe it revisits this area and maybe even that area. And if it loses this area, then this area is fair game. But that would take a market crash. On its own, I don't think it'll get here. On its own, it could get to here, but it needs the help of the market. So again, here, if I have profits, I do protect them by buying some debit put spread or by actually booking them and re-engaging cheaper. All right, so that is StarBucks. Let's look at Netflix, which I haven't looked at in a while because it's been a mystery stock. So much love for Netflix these days and so much market hate. Makes me a little bit nervous, folks. Last time I covered it, did I put this bubble before the breakdown? Interesting. Anyway, I have to revisit my notes. Let me zoom out to 1 year. Maybe I see my notes. 820 went up another 11% from my last note, then rising wedge broke and hits the ideal lower target. Yeah, from one kind. Okay, so it hit this ideal target of the breakdown of the rising wedge that we had going on, or whatever formation that it was. But it is much loved, and the idea is that it's going to grow globally and that the sky is the limit. But what they don't count on is competition. I think they're underestimating the potential competition for Netflix. Fundamentally, I can't short it up here, but most definitely I personally cannot go long it up here. I mean, look at where it is. This is all-time highs, and it's just inches from it, right? So tell me what's going to happen here or here. in this area. That's a bigger area. So if I have profits here, I most definitely would book that. You're hearing the same tune from me on every one because I have no faith in the market sentiment. The fundamentals have not changed, but the sentiment is definitely bruised. Now this is Amazon. Look at that, higher low, higher low, higher low, higher low, including the debacle here. Higher low, but knocking on this these two trends. And let me zoom out to see how valid these are. Long dated trends, 2 years, that's 5 years. Yeah, so this area is powerful up here, powerful in both ways, powerful roof, and it could be a fuel for upside. But I just can't imagine we're going to bust out through. But hey, maybe we could. Maybe we can surprise Nick. So this area I'm going to be watching in the next few days to see if it wants to revisit that funny poke up here. And let's call it in the next couple of months hit this target up here. However, I would like to be cautious because I want to say, all right, this is a powerful area and it works both ways. So boing, tick, 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 down to here. That's the option number 2. And then from here, is it up to here again and then break out to this, or down to here and we continue until this range gets so tight and then get up here, or then get come down to there. So let me show you. Okay, so this is the ultimate goal, and this is by that time when we go up there, it's probably no, these are eyeballs. So these are ultimate goals of this tightening and then breaking up or down. Okay, this is just eyeball. All right, this is Amazon. I might have time for one more. All right, how about we do Nike? Nike, almost exact same comment as Amazon. Good company, nice trend, immediate rejection of the low. But then again here, do I chase it? I just can't chase it. Oopsies. I need it to show me what's going on. Okay, this is a rough roof that I'm drawing. I want to see what happens around here. Yep, up here or down to here and then up here. So best I can see is a breakout to here, and worst I can see is revisit of these lows. So I believe that we may have some sort of a like this going on, where this area would be determinant, ultimately this area would determine revisiting this area, or a breakout from here to revisit this area. So this is the cluster, so I would not chase it past here. And downside, if the markets collapse, yes, we may see it come down to here and then break down. But if it does, I mean, this was one of the good guys. They know how to make money. All right, Nick signing out. 15 minutes is enough. And if you have any specific questions, please let me know.